Hi, I'm Corey Litzenberger from CGLTax.ca, and this is Brainstorming Plus Tax. Here's something that many practitioners still like to use, even though most of us in the tax community kind of shy away from them, and that is management fees. Now, many of you may be familiar with the concept of management fee being paid between corporations in order to shift income, but now with the new specified business income rules, we have to watch for that. Others are familiar with the bonus down to family members or to the shareholders of the company, and we have to watch for reasonability and the tax on split income rules as well. But there's one pet peeve that I have with a planning situation that involves the $30,000 threshold for GST. The problem with this plan is this $30,000 threshold does not apply just to an individual or to a company. The $30,000 threshold actually has to be shared. So, since the introduction of the GST in 1991, it's been common for some of these practitioners to pay a management fee up to the small supplier threshold of $30,000. The theory of this strategy was that if an individual does not earn more than $30,000 of self-employed income in a 12-month period, you would be considered a small supplier under the Excise Tax Act, and you would not have to register for GST. Unfortunately, this small supplier designation is tainted by associated persons. And under the Excise Tax Act, individuals can actually be associated to a company, whereas for income tax, they are not. Under 127(2) of the Excise Tax Act, any person that is not a corporation is associated with a corporation if they control that corporation or if they are members of an associated group that controls the corporation. So in other words, a majority shareholder is associated to the corporation. Most people would say that a 50-50 split of two shareholders would get you out of this association. However, there's a risk because a partnership is also a person under the Excise Tax Act, even though it isn't for income tax purposes. The CRA could take a position that the shareholders is a de facto partnership, even if it isn't a legal one, which may cause problems with the association as a result. Obviously, it comes down to the intentions of the parties and the actions that dictate this. So something to be aware of as well. Section 148 of the Excise Tax Act says that a person is a small supplier if the total of all sales income that became due in the last year to the person or an associated person does not exceed $30,000. So basically, that means that $30,000 gross revenue or gross sales test is shared amongst the associated persons. So as soon as you have a company that makes more than $30,000 in sales and has become registered for GST, any payments to an associated person that could be considered self-employed income or business income means that they automatically have to be registered for GST because they are over the small supplier's threshold. In closely held businesses, this can cause problems where practitioners that are not up to speed on GST rules could actually be causing problems for their clients. And what would happen there is the GST would be deemed to be collected by the person receiving the management fee. So you paid them the $29,900 management fee so that they would be a small supplier. The CRA is going to come along and say, well, no, that $29,900 is inclusive of GST, or in HST provinces, the HST. And so they're going to take the position that the recipient of those proceeds collected the GST, HST, and will have to remit that to the government. Where the problem comes in now is obviously the purchaser themselves does not get an input tax credit because these are two separate taxpayers. Administratively, the CRA usually will allow a bit of a wash and just kind of apply the wash penalty, as it were, for those types of transactions where one person has the GST, the other person's getting it back. But that's not always the case. So we have to make sure when you're watching these types of things, any payment to associated persons could have a GST problem. The solutions to these types of things are to pay a bonus and file a T4 as wages, but you do have to watch for late filing and remittance penalties on things like CPP withholdings. Declare dividends and file a T5. Again, watch for those late filing penalties. Or you could register the individual for GST, collect the GST, and claim the input tax credit in the company. So those options are all available to you as a workaround. But just doing the management fee up to the $30,000 threshold saying, hey, my client's not going to have to pay GST, that could get you into some bigger problems than you ever want to be in. And with that, for CGL Strategic Business and Tax Advisors, I'm Corey Litzenberger. Thanks for listening.